Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Finance of America Reverse published its first ever home equity punch list to gain insight and understanding around people's perspectives on home equity, its potential uses, and how it can fit into homeowners' long-term financial goals. The survey findings confirm that FAR has long evangelized as a company. An overwhelming majority of older Americans are not considering home equity in their approach to retirement, but many should. Joining me to discuss, we have Steve Resch, Vice President of Retirement Strategies at FAR. Steve, it's great to see you. Welcome to Trade Talks.
Thank you, Jill. Thanks for having me.
What jumped out to you as the most noteworthy or surprising results in the survey?
I think really the most noteworthy thing was that, and it really wasn't surprising to us, but that the majority of retirees or older Americans are not using home equity. And they really kind of should, but they just are avoiding it completely.
What makes you believe that financial advisors should take heed and talk to their clients about this?
Well, a part of the study, which was kind of interesting, was that 90% of the people that we surveyed who use financial advisors, they believed that the financial advisors would talk to them about home equity if they felt it was an important part to include in their retirement plan. And yet, it's interesting, we did another study that we co-sponsored with the Academy for Home Equity and Financial Planning. And through that study, we learned that 63% of the financial advisors that we interviewed never talked to their clients about home equity. So we've got a real conundrum here where the advisors are not talking about it, and yet their clients are anticipating that the advisors will talk to them about it.
Based on the survey findings, who stands to benefit the most when it comes to home equity?
Well, it's really, we're, of course, in our business, we're focused on the seniors, and we think they have a tremendous opportunity here. When we look at what seniors are holding in equity today, it's over, I think the last survey I saw was over $11 trillion in equity. All right, so we've got a tremendous amount of equity that they're holding, and yet we're looking to help them successfully fund a 20 or 30-year retirement plan, and yet they're not looking at this tremendous asset that they could bring into that financial planning process and help safeguard and ensure their retirement.
From FAR's perspective, what do you do with these findings?
We're using them to just really help support what our mission that we are on. We are partners with the Financial Planning Association as well to help educate both financial advisors and consumers about the value of home equity and how it can really be used to safeguard and enhance the retirement plan. So we're going to continue moving forward with our education process.
So, Steve, educate me here. Is this what is known as a reverse mortgage, or how does this work, particularly in a rising interest rate environment? What does the workflow look like when you access your home equity loan?
Yeah, it is a reverse mortgage that we're focused on. And really what we're talking about is the ability to access, there's various products in the reverse sphere, but the ability to access up to $4 million in home equity. And the nice thing about this, when you bring it into a financial plan, is that there's never a required principal or interest payment for as long as you're living in that home. So we've got the ability to draw all of this capital into the financial plan without having it impact the budget. So this is where it can really be used to help safeguard that retirement plan.
Do rising interest rates impact this at all? And it might be an obvious question. When you sell the home, obviously that gets paid back, the balance gets paid back.
Correct. Rising interest rates are really not the focus when it comes to reverse mortgage. And again, because there's no required payment. So we're not really looking at a monthly change in a budget because of a rising interest rate environment. One thing that's kind of important, though, to think about in this rising interest rate environment is the fact that, we don't know what's going to happen tomorrow with home values. If your real estate loses value, it's nice to have that reverse mortgage in place now because you've kind of locked in or you've hedged the fact that if the value goes down, you still have access to your capital. But another thing that a lot of people don't realize is that even with a reverse mortgage, you can always refinance these down the road. So let's say you put one in place today, it's a higher real estate or higher interest rate environment. Rates go down, home values go up down the road. You can always refinance that just as you could any other mortgage.
All right, Steve, appreciate the insight, the education. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thanks for having me, Jill.